What if you could apply ancient wisdom to achieve modern financial success? Welcome to Simplified Whispers, your go-to destination for insightful book summaries and life-changing wisdom. In today's video, we're exploring The Stoic Path to Wealth by Darius Foreau, a book that blends ancient Stoic philosophy with modern financial principles to help you build lasting wealth. Here, whether you're looking for financial success, personal growth, or timeless wisdom, we've got you covered. Subscribe and join us on this journey to simplify complex ideas and unlock a wealth of knowledge. Chapter 1: My Pursuit of Enduring Prosperity. In the opening chapter, Darius Foreau shares his journey of realizing that true wealth goes beyond just money. Like many, he once believed success meant earning more, buying assets, and living a luxurious life. But over time, he discovered that financial security alone didn't bring real fulfillment. Turning to Stoic philosophy, which teaches self-discipline, emotional control, and inner stability, Foreau began shifting his focus from chasing money to building wisdom and resilience. He explains that real wealth means achieving financial independence and peace of mind. Instead of simply accumulating riches, he emphasizes making smart decisions, spending mindfully, and staying calm through financial ups and downs. This chapter lays the foundation for the book, urging readers to redefine wealth, not as something to chase, but as something to build through discipline and thoughtful living. Chapter 2: Build Wealth by Applying Ancient Wisdom. In this chapter, Darius Foreau shows how ancient Stoic wisdom offers a timeless guide to building lasting wealth. He argues that while modern financial strategies often rely on market trends or luck, true wealth comes from mastering your mindset, habits, and behavior. Inspired by Stoic thinkers like Seneca, Marcus Aurelius, and Epictetus, Foreau explains that financial success isn't about earning the most. It's about controlling your desires and making clear, rational choices. He highlights key Stoic ideas like focusing only on what you can control. Instead of stressing over market crashes or economic shifts, a Stoic accepts what can't be changed and focuses on how to respond wisely. He also stresses patience and long-term thinking, warning that impulsive decisions, like overspending or chasing risky investments, lead to instability. Frugality, he explains, isn't about deprivation, but about making intentional choices that support long-term peace and security. By blending Stoic principles with financial planning, Foreau encourages readers to build wealth that's not only strong, but also resilient and meaningful. Chapter 3: How to Build a Stoic Edge in 3 Steps. Darius Foreau introduces the Stoic Edge, a mindset that helps individuals navigate financial and personal challenges with clarity, discipline, and resilience. In a world driven by impulsiveness and short-term thinking, mastering Stoicism provides a competitive advantage. He outlines 3 key steps: self-discipline, rationality, and voluntary discomfort. Self-discipline involves controlling desires and impulses, avoiding reckless spending, and focusing on essentials rather than material excess. Embracing rationality means making logical, long-term financial decisions, recognizing that while external events are beyond control, one's response is a choice. Lastly, practicing voluntary discomfort, inspired by Seneca, involves experiencing temporary hardship to build resilience, such as living with less or stepping out of comfort zones. Foreau argues that applying these 3 principles not only builds wealth, but also fosters inner stability and long-term success. Chapter 4: Valuable Skills Are Better Than Money. In this chapter, Darius Foreau challenges the idea that simply collecting money ensures financial security. Instead, he argues that building valuable skills is far more important. While money can be lost due to inflation, bad choices, or market crashes, Skills are long-lasting assets that continue to create income and opportunities. Inspired by Stoic philosophy, Thoreau highlights that true wealth lies within, through knowledge, discipline, and adaptability. He explains that financial freedom isn't just about earning or saving more, but about being able to create value in any situation. He stresses the importance of investing in skills like critical thinking, communication, problem-solving, and financial literacy, skills that help people make smarter decisions and adapt to change. Unlike money, skills grow over time and boost one's earning power and resilience. Thoreau urges readers to focus on learning and growing, rather than chasing quick money. By developing skills that match their strengths and interests, people can achieve lasting prosperity and stay strong through any financial challenge. Chapter 5. The Hidden Principles of the Market. In this chapter, Darius Thoreau explains that real financial success comes not from trying to predict short-term market trends, but from understanding the deeper principles that drive the economy. Influenced by Stoic philosophy, he reminds readers that external events like inflation or market crashes are beyond our control. Instead of reacting emotionally, he encourages a calm, rational approach to managing money. Thoreau points out that many people lose money by chasing trends when prices rise and panicking when they fall. He highlights timeless economic concepts like supply and demand, investor psychology, and the role of innovation, emphasizing that markets move in cycles of growth and decline. Rather than gambling on short-term gains, he advises focusing on long-term investments in assets with real value. He stresses emotional detachment, patience, and discipline, key Stoic principles, as the foundation of smart financial decisions. In the end, Thoreau makes it clear: financial success isn't about luck. It's about consistently making wise, well-informed choices that lead to peace of mind and lasting wealth. Chapter 6. Consistency pays off. Investing is a habit. In this chapter, Darius Thoreau highlights the power of consistency in building long-term wealth. He explains that instead of chasing the perfect investment strategy or trying to time the market, true financial success comes from making investing a regular habit. Inspired by Stoic philosophy, he compares investing to personal growth or fitness. Both require patience, discipline, and steady effort. Thoreau shows that those who invest small amounts regularly over time often outperform those who take big risks, hoping to get rich quickly. Thanks to compound growth, even modest investments can grow significantly if done consistently over the years. He cautions against emotional decisions, like chasing trends or reacting to market swings, and encourages a calm, long-term mindset. Whether it's through index funds, stocks, or real estate, the key is to stay disciplined and focused on what you can control: your consistency, not market movements. Just like one workout doesn't make you fit, one big investment doesn't make you rich. Thoreau concludes that financial freedom isn't about luck, but about steady, smart investing habits that grow wealth over time. Chapter 7. Get comfortable with short-term losses. Darius Thoreau emphasizes that short-term losses are an inevitable part of financial success and should be seen as temporary setbacks, not failures. Many investors panic when markets dip, leading to impulsive decisions like selling too early or avoiding risks. Drawing from Stoic philosophy, he explains that while market fluctuations are beyond our control, our response to them determines our financial future. Since markets move in cycles, those who remain patient and rational during downturns are the ones who build lasting wealth. Thoreau compares investing to climbing a mountain, where setbacks are necessary for long-term growth. He introduces negative visualization, a Stoic practice of mentally preparing for difficulties to stay calm when they arise. He also stresses the importance of diversification and risk management to balance losses in one area with gains in another. Ultimately, He concludes that resilience and a long-term mindset are key to financial stability, and instead of fearing downturns, investors should embrace them as part of the natural wealth-building process. Chapter 8. Avoid losing all your money. In this chapter, Darius Foreau emphasizes that preserving wealth is just as important as building it. Many people focus on making money, but overlook the risks of reckless investments and poor financial decisions. He highlights the Stoic principle of prudence, stressing that true financial success comes from minimizing risks and protecting accumulated wealth rather than chasing high returns. Long-term security depends not just on earning more, but on safeguarding what one already has. Foreau shares practical strategies to avoid financial ruin, including diversification, emergency savings, and avoiding speculation. He warns against emotional decision-making, greed, and overconfidence, which often lead to devastating losses. Encouraging a defensive mindset, he references premeditatio malorum, the Stoic practice of anticipating potential problems to help individuals prepare for downturns and unexpected financial setbacks. He concludes that financial success is not just about growth, but about avoiding ruin, and that a disciplined, cautious approach ensures lasting financial independence. Chapter 9. Greed is not good. In this chapter, Darius Foreau challenges the belief that greed drives financial success, arguing that it often leads to reckless decisions, financial instability, and stress. While ambition and financial security are important, unchecked greed results in risky investments, over-leveraging, and sacrificing well-being. Stoic philosophy teaches that true wealth comes from contentment and self-discipline, not from an endless pursuit of riches. Foreau draws on Seneca and Marcus Aurelius, who warned against excessive materialism and the dangers of chasing wealth without purpose. Foreau contrasts greed with rational ambition, explaining that sustainable wealth is built through patience, discipline, and calculated risks rather than impulsive accumulation. Greed fuels fear-based decision-making, causing obsession with gains and panic over losses. This instability leads to gambling on speculative assets, constantly changing strategies, and unrealistic expectations. Instead, he advocates for voluntary simplicity, focusing on long-term financial security and personal values rather than endless accumulation. He concludes that wealth built on greed is unstable and stressful, whereas wealth built on discipline and purpose leads to lasting prosperity and inner peace. Chapter 10. Let your money do the work. In this chapter, Darius Foreau emphasizes that true financial independence comes not from working harder, but from making money work for you. Many people stay trapped in the cycle of earning and spending, relying only on active income. Foreau explains that lasting wealth is built by creating passive income through smart investments in stocks, real estate, or businesses. Rooted in Stoic philosophy, he promotes efficiency and strategy over hustle and urgency. He warns against impulsive trading, emotional decisions, and chasing quick profits, mistakes that often lead to financial setbacks. Instead, he advocates for long-term investing, built on patience, discipline, and emotional control. Foreau compares investing to planting seeds. Small, regular contributions grow into significant wealth over time through compound growth. The earlier one starts, and the more consistent the effort, the greater the rewards. By adopting an invest and grow mindset rather than an earn and spend one, individuals can build financial freedom that lasts, even when they're no longer working actively. Chapter 11. Trust your judgment. In this chapter, Darius Foreau stresses the importance of developing and trusting one's own judgment in financial decisions. Many people struggle with wealth building because they rely too much on external advice rather than thinking critically for themselves. While learning from experts is helpful, blind reliance often leads to costly mistakes. Inspired by Stoic philosophy, particularly Epictetus, Thoreau urges individuals to take full responsibility for their choices and make decisions based on logic rather than emotion. Those who constantly second-guess themselves are more likely to engage in speculative, impulsive investing rather than sound, long-term strategies. He warns against herd mentality, where people invest just because others do, often leading to financial bubbles and losses. Instead, he encourages developing a personal financial philosophy aligned with one's goals and risk tolerance. He suggests conducting independent research, analyzing trends, and avoiding information overload, as too much financial news can create anxiety and cloud judgment. The key to financial success, he concludes, is trusting one's reasoning, taking calculated risks, and staying committed to a well-planned strategy rather than being influenced by external noise or short-term market fluctuations. Chapter 12. Stick to your investing strategy. In this chapter, Darius Thoreau stresses that commitment and discipline are key to successful investing. Many people create a solid strategy but abandon it due to fear, uncertainty, or market fluctuations. He argues that true financial success comes not from constantly changing tactics, but from sticking to a long-term plan, despite setbacks. Drawing from Stoic principles, he emphasizes the importance of controlling one's reactions, avoiding impulsive decisions driven by fear or greed, and trusting the process. Investors who panic sell during downturns or chase market trends often erode their wealth rather than build it. Thoreau provides practical steps for maintaining investment discipline, such as setting clear goals, automating investments, and resisting daily market noise. He warns against trying to time the market, explaining that consistent investing over time is far more effective. He shares examples of investors who stayed committed during market crashes and eventually prospered. By embracing patience, resilience, and rational decision-making, individuals can avoid costly mistakes and achieve enduring financial security. In the end, he concludes that wealth building is not about picking the perfect investment, but about having the mental strength to stay committed to a sound strategy. Chapter 13. How to start investing in stocks. In this chapter, Darius Thoreau provides a practical guide for beginners looking to invest in stocks. He explains that while the stock market is a powerful wealth-building tool, many avoid it due to fear or lack of knowledge. However, investing isn't about gambling or predicting short-term movements. It's about understanding the fundamentals and making rational decisions. He emphasizes that successful investing requires patience, consistency, and discipline, principles rooted in Stoic philosophy. Just as Stoics control their reactions to external events, investors should focus on long-term financial decisions rather than being swayed by emotions or market noise. Thoreau outlines a step-by-step approach to stock investing, advising beginners to start with low-cost index funds for diversification and lower risk. He stresses the importance of researching companies, analyzing financial statements, and understanding market trends before investing. He warns against panic selling, overtrading, and following market hype, advocating instead for a buy-and-hold strategy where investments grow over time. By treating investing as a long-term process rather than an emotional reaction to market movements, individuals can achieve financial stability and independence, ensuring their money works for them. Chapter 14. Retire like a Stoic. In the final chapter, Darius Thoreau shows how Stoic philosophy can lead to a peaceful and meaningful retirement. He explains that retirement shouldn't be seen as an escape from work, but as the reward for years of smart financial choices and disciplined living. Many people chase wealth all their lives, only to feel lost when they finally stop working. The Stoic view, however, focuses on financial independence, mental readiness, and having a purpose beyond work. Thoreau stresses that true freedom isn't about luxury. It's about having enough to live comfortably with peace of mind. He shares practical tips for retiring like a Stoic. Live simply, spend wisely, and avoid unnecessary luxuries that cause stress. He also recommends building passive income through investments or side businesses to support your lifestyle without depending on a job. But he makes it clear, money alone isn't enough. A fulfilling retirement also needs purpose. Thoreau encourages readers to explore hobbies, relationships, and passions that bring joy. Inspired by the Stoic idea of memento mori, remembering death, he urges us to use our time meaningfully, focusing on growth and contribution. In the end, retiring like a Stoic means more than just financial stability. It's about living with wisdom, simplicity, and intention. Chapter 15. The 90-10 Rule of Speculation. In this final chapter, Darius Thoreau introduces the 90-10 Rule of Speculation, a principle that helps investors balance calculated risks and long-term stability. He explains that while speculation can sometimes yield high returns, it is unpredictable and often driven by emotions rather than logic. Most people engage in speculative trading, whether in stocks, cryptocurrencies, or real estate, without a clear strategy, leading to heavy losses. To avoid this, Thoreau suggests limiting speculation to 10% of one's portfolio, while keeping 90% in stable, long-term investments. This approach allows investors to explore high-reward opportunities without jeopardizing their financial security. Thoreau supports this principle with Stoic wisdom on moderation, emphasizing that patience and rational decision-making are key to building lasting wealth. He warns against the temptation of chasing quick riches, as markets are unpredictable and speculation often leads to disappointment. Instead, he encourages maintaining emotional detachment, accepting losses as part of the learning process, and prioritizing stability over impulsive decisions. He concludes that true wealth is built over time through discipline, frugality, and a strong financial mindset, one that, like granite, remains unshaken despite challenges. Ultimately, financial success lies not in reckless speculation, but in resilience, self-control, and long-term thinking. Thanks for watching Simplified Whispers. I hope this summary of the Stoic Path to Wealth helped you see how ancient wisdom can guide modern financial success. If you found value in this video, don't forget to like, share, and subscribe to stay updated with more insightful book summaries. Let me know in the comments which book you'd like me to cover next. Your support helps us bring more powerful ideas to life. Until next time, stay curious, stay disciplined, and keep simplifying wisdom. See you in the next video.